But our focus is on ABB India. After declaring its results, ABB Global flagged off a lot of worries as far as global capex recovery is concerned. The order inflow for the group worldwide also wasn't good, but they said that the Indian operations are growing well. My colleague Vivek interacted with the company's managing director Sanjeev Sharma and the chief financial officer TK Sridhar started by asking about the India growth story. Listen into what they had to say.
It is true that not only ABB India, but India is shining in terms of how the growth is sustaining here, and is much more broad-based. And ABB, as such, with our portfolio, has 18 divisions operating in this country, and all of them are highly localized. And we have factories which are producing products which are as local as 100%. And we are participating in 23 market segments. That kind of a resilience in the market is actually playing well for ABB India, and India is doing well at this point of time.
Before we get into Q2 results, what I want to ask you is, yesterday to the exchanges, you've given a very interesting update on an order that you've got from Reliance Life Sciences. Tell us a little bit about the order itself, the scope, and when does it start kicking in as far as ABB's financials are concerned?
In this case, our customer is setting up a life sciences. It's actually the biosimilar and protein manufacturing unit in Nashik. And ABB is participating in supporting our customer with the control and automation system, which will essentially manage the process as well as the batches that will be produced there. So it's a core and the central part of any manufacturing facility. So we are very, very happy to be participating.
I want to talk to you about Q2 results. Q2 CY23, handsomely beat all the analyst estimates by a large margin. Number one, you did see a very strong margin expansion. Can that sustain going forward? Because a lot of analysts believe that this was both pricing-led as well as operating leverage benefits kicking in. In that context, can pricing sustain, given the fact that we understand that you are seeing competition, especially from global players that are participating in the domestic market? So can the margin recovery especially sustain? And we'll come to the order flow aspect as well in a bit.
Right. Thanks, Vivek, for this question. I think we are quite familiar with this question, and we have this from all the analysts every time. So I think the first thing is that how does this margin come from? I think the material cost is a major component of how the margin is derived. So we are today trending at 63.5 or less than 64. And that's more led by, as you rightly said, by a bit of a price increase which we have in the markets for all the products what we are supplying. And also the operational advantages what we have in terms of capacities which we are utilizing or leveraging at this point of time. I think as far as capacities is concerned, we have sufficient capacities to manage the growth requirements of the country as well as the organization as such. And when it comes to the pricing factor of it, it's all a play of what customers need as a technology, and the technology definitely derives a premium in the market. And therefore, we, ABB, having a technology product, definitely are hopeful that we would be able to sustain this particular price advantage what we have at this point of time.
So currently, you're not very worried about competition. You're confident that margins can sustain both on back of pricing as well as operating leverage.
As actually what Sanjeev was mentioning, so we're in 23 market segments, right? And all these 23 market segments have their different characteristics of their own. So I think this is the way I think we have a good play, and also the fact that we are in Tier 3 and Tier 4 cities, outdoor towns as well, right? That gives us a good mix of where we pick up orders from and how it drives the pricing for those markets.
I want to talk to you about order inflows. Order inflows was quite strong. Q2, however, was helped by a very large order from ArcelorMittal as well. Order inflow came in at over 3,040 crore for Q2, and base orders were higher by 4%. This is despite the fact that you actually had a very strong base. So order inflow, especially in Q2, is quite strong. Can this sustain, especially now in the backdrop of this being a pre-election year? So how is ordering activity trending out, and will you be able to confidently meet your guidance?
You're absolutely right. I think the orders in the last quarter on a very higher base were quite strong and resilient, and it is contributing to our backlog, which is 29% higher than the previous year. So that's something gives us a very good visibility in terms of how we will execute our revenues going forward. And it's a good thing that, among the 23 market segments, we had very agile market segments which were growing faster. And it's good to see now the core segments are also have started placing large orders. So that's a good mix that we are going to enjoy going forward, because we can see in our pipeline similar in the areas of steel and some other core sectors also the capex is forming to a good level. Now going forward, we do see resilient in the most of the market segments we are operating in, but we know by nature of different market segments, they peak out, they plateau, and then they go down, and then they come back in. So the very reason we have 18 businesses exposed to 23 market segments, that gives us a certain amount of resiliency, and that too in a market which is growing quite well.
So your current order book at the end of CY22 was 8,600 crore. Your current order backlog is 730 crore, and we understand a 12 to 15% growth in orders is what we are anticipating. So right now, can we meet the upper end of the margin band or the guided band?
So I think let me give a bit of a color. First of all, we don't give a formal guidance about what it is. We give an outlook as to how we see the markets. I think for the last 3 to 4 quarters, we have been consistently growing at double-digit growth, both in orders as well as revenue. And since we have a good backlog, and that has to be converted to revenues, I think it is fair to assume that we would have a double-digit growth in revenues as well. So that's where I would like to come up with.
So let's compare, Q2 CY23 performance versus the expectations for the full year guidance. So revenue expectations closer to the 10,000 crore mark, gross margin guidance of close to 35 to 37%, and PAT margins of close to 10%. On track to achieve all this for CY23?
I think last year was an year where we started to touch 10,000 crores on the orders. And naturally, with a stronger backlog, I think our ambition is to reach the 10,000 crores in revenue as well, right? So, and I think we are very consistent in saying that first we aimed at PBT to be at double-digit margins, and now we have actually transformed it into a stronger operations, due to stronger operations, the PAT percentage as well. So I think our ambition to maintain the 10% on the PAT level still is continuing.
So revenues of 10,000 crore, order inflow growth of close to 12 to 15%. That's what we are anticipating for the remainder of the 2 quarters or H2 CY23 from ABB India this time around.
Definitely. I think it depends on how the markets and prices support as well.
Okay, that's the word coming in from ABB India.